Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this CA final RTP discussion for November 2024. Let's start discussing the RTP and its related questions. There was one custom related question which had a computational error in the previous RTP. Now the new RTP which is uploaded on the ICI website has made some corrections in the question, thereby the answer remaining same. We will discuss it. That's a separate question number 18 of customs. We'll start with case study scenario. As a thumb rule, we will first see the questions which have been asked and then read the case scenario so that we can grasp the answers at a quicker pace. Let's go to the questions. Based on the facts of the case scenario given above, choose the most appropriate answer to question 1 to 5. Which of the following statements is correct in respect of services related to usage of vacant godown? So there's a vacant godown which is being used. Hotel division shall charge GST. No GST chargeable. Should charge IGST, or it should charge IGST to the corporate office. Okay. Assuming that the payment for utilization of IT platform has not been made by hotel division to the IT division till the end of October month of current financial year, what should hotel division do? So I have not made the payment to the IT division. What should be my stand? If you recall, if I don't make the payment within 180 days from the date of invoice, I have to reverse ITC. But that does not apply in three cases: RCM, supply without consideration, third party payment. This in my view would be supply without consideration, because related party transaction or distinct persons are covered in supply without consideration. So no reversal will be required, but we'll confirm it once we have read the main part. In relation to stay of executive director's family in company owned hotel in Udaipur, Rajasthan, value of supply of accommodation service provided by hotel division is, okay, we'll have to find the hotel division value. For accommodation services provided to a US resident and citizen, the place of supply will be accommodation. You understand, even if you provide it to a US resident, immobile property, the place of supply will be location of the immobile property. So we'll have to just see where the hotel is, that will be the place of supply. In respect of long-term lease of industrial plot received from Maharashtra Industrial Development Corporation, so they are talking about upfront lease payment. We will see that in the main question. Now let's go through the main one. Shreyans Limited, hereinafter referred as company, is a conglomerate having diversified businesses including hotels, FMCG, IT, etc. Has its corporate office in Delhi and operations across multiple states in India. As an internal policy, the company has obtained single GST registration for each state, irrespective of diversified business operations being undertaken in the state. During the month of April, the company undertook the following transactions. FMCG division of the company in Jaipur agreed to use the vacant godown within the premises of hotel division in Udaipur, Rajasthan, so both Rajasthan, for storage of its goods. The value of such an arrangement was agreed at 5 lakh per month. Said amount was agreed on to be adjusted by way of intra-division book adjustment on a monthly basis. Now the question is whether GST will apply. As a company policy, we take one registration in one state. Both are in Rajasthan. They will not be distinct persons. So there will be no GST on this particular transaction. Then the hotel division of the company in Maharashtra used IT platform owned and managed by IT division of the company in Delhi. The value of such service was 12 lakh rupees per month. IT division treated the same as deemed supply liable to GST under Schedule 1, supply without consideration, distinct person, related person, and charge GST on such deemed supply in the invoice issued to Hotel Division on 25th April. Hotel Division availed ITC of such deemed supplies from its Maharashtra office in April itself. No payment was made by Hotel Division to IT Division. Will there be a need to reverse ITC? No need to reverse ITC. Why is that, sir? For a simple reason that the moment it's a Schedule 1 supply without consideration, it is covered by the exception of 180 days rule, and hence no reversal will be required. Okay. Executive Director, as part of his salary and perquisites under the employment agreement, was eligible for voucher worth 5 lakh redeemable at any hotel property of the company in India. So he is getting a 5 lakh voucher as part of his salary. The voucher was used by Executive Director for stay of his family in the company owned hotel in Udaipur, Rajasthan. Total amount charged from Executive Director was 25 lakh. The voucher value 5 lakh was deducted from such amount at the time of payment. So GST will apply on how much? 25 lakh. Why? See, but sir, it's part of employment contract now. When you give the voucher to the director, it is part of employment contract. But then when he uses it for some supply of service, we can't reduce the price of that particular supply of service saying that no GST will apply on that. No, that will be liable to GST. Entire 25 lakh will be liable to GST. 20 lakh paid, 5 lakh using voucher. Hotel division provided accommodation service to a US citizen and resident for a wedding ceremony organized at its hotel in Udaipur, Rajasthan. The total amount of 2 crore for such service was paid by an Indian individual residing in Delhi on behalf of US resident in Indian currency. The amount was received by Mumbai Maharashtra Office Division of Hotel. Whether GST will apply? Yes, and place of supply will be Rajasthan. Sir, will it qualify as export? No. One, place of supply is in India. Second, Indian currency received. Two conditions not met. It is not a case of supply with export. Okay. The company received long-term lease of an industrial plot from Maharashtra Industrial Development Corporation in auction against payment of an upfront amount as lease premium of 20 crore for a period of 50 years. The company paid location charges of 5 crore in addition to said premium. So totally you have paid 25 crore. There was a circular which is issued by CBIC which says principal supply is upfront lease payment and location charges will form part of that upfront lease payment. Principal supply being upfront lease payment, so whatever is the taxability of upfront lease payment, that will be the taxability of location charges. So if this 20 crore is exempt, 5 crore will also be exempt, and it is from Maharashtra Industrial Development Corporation plus more than 30 years, so it will be eligible for the exemption. The rate of GST in case of intrastate supplies, unless otherwise provided, shall be 9% CGST, 9% SGST, and for interstate supply 18%. All the divisions of the company are eligible for 100% input tax credit unless otherwise specified. So they will be eligible for 100% ITC. Now let's read the questions. Which of the following statement is correct in respect of services related to usage of vacant godown? No GST is chargeable on usage of vacant godown. Why? For a simple reason that in one state you have one registration, so it's not a distinct person transaction. Assuming that payment for utilization of IT service has not been made by hotel division to IT division till the end of October of the financial year, the hotel division, should it reverse ITC? No, need not reverse ITC. Correct. Should have availed ITC only after the end of the financial year? No. Should not avail ITC? No. So the right answer will be B. Okay. In relation to stay of executive director's family in company's owned hotel in Udaipur, the value of supply of accommodation service is 25 lakh. Because service provided is 25 lakh. You have paid using the voucher. There is no deduction for that. When you received it, it was covered by negative list. When you use it, it is not covered by negative list. Okay. For the accommodation service provided to US resident and citizen, the place of supply will be Udaipur, that is location of the immovable property. In respect of long-term lease of industrial plot received from Maharashtra Industrial Development Corporation, upfront lease premium 20 crore is exempt while 5 crore is liable. No, this is wrong. GST is payable on upfront of 20 crore. No. GST is exempt on entire premium of 25. Correct. GST is payable on entire 25. No. It is exempt. Entire 25 crore will be exempt. Okay. Let's follow the same approach for the next MCQ as well. Let's go through the questions first. Based on the facts of the case scenario given above, choose the most appropriate answer to question number 6 to 11. The value of supply on which GST is payable for April. So we need to be careful of the month. Whatever is payable in April. For Rajasthan state, in relation to incentive paid to Ghanshyam Das of Gujarat. So we'll have to see what should be the treatment for incentive. Slotting fee. What is slotting fee, sir? Basically allowing an allocation of products in a supermarket. Say suppose I allow that one brand product will be displayed at the top. Now for that I will take some slotting fee from the brand. That's as good as renting of immobile property. So the question would be, what would be the place of supply? Then the tax on penalty received on account of delayed payment of consideration. When is it payable? Which return? Whenever it is received, that is the time of supply. The GST on rental amount of upcoming store near Ahmedabad. See, rental, if your supplier is in same state, end up charging C plus S because place of supply will be there. For empty cargo containers transported to Mumbai warehouse. So you are sending empty cargo containers. If you recall, empty cargo containers, there is no e-way bill required because it's covered by the exemption, empty cargo containers. So there's no need of e-way bill. Anyways, one answer we have got, but we'll anyways read the balance part and check whether our conclusion is correct. Okay, let's see. We Look Smart Limited, hereinafter referred as company, is a leading retail chain of India. It has retail stores in multiple states with its corporate office located in Mumbai, Maharashtra. The company has GST registration across all states from where it operates its retail stores. Company undertook the following transactions during the month of April. Let's see. Supplied goods worth 100 crore through retail store in Rajasthan. So they had asked value of supply for Rajasthan and offered a cash discount of 2 crore to the customers in the state of Rajasthan. So how much will be taxable? 100 crore minus 2 crore, 98 crore. Ghanshyam Das, a retailer in Gujarat, purchased goods worth 5 lakh in the month of January of preceding financial year. Subsequently, the company offered incentive on purchases to Ghanshyam Das by issuing commercial credit note. Commercial credit note meaning it is without GST. Subsequently, post supply discount not known at the time of supply of 50,000 for the month of April. So will Ghanshyam Das have to reverse ITC? No need to reverse ITC. Okay. Company also charges slotting fee from the manufacturers of goods to keep their products on the shelf for sale. Company received 5 crore from a manufacturer located in West Bengal for keeping its products on the shelf of its store for sale in the state of Haryana. What would be the place of supply? Place of supply will be Haryana. The payment for the same has been received by Mumbai head office of the company. Invoice was issued by Haryana registration of the company. Company received an amount of 2 crore in April as penalty for delayed payment from its customer for sale of goods made during January of preceding financial year in retail store Rajasthan. So 2 crore, will this be liable to GST in April? Yes, this 2 crore will be liable to GST in April because penalty for delayed payment of consideration for a taxable supply. The time of supply is when such penalty is received. So it is received in April, it will get added to value of taxable supply. Company entered into a rental agreement with a registered person for an upcoming retail store, a commercial property in Ahmedabad, Gujarat. The said store is outside the municipal limits of Ahmedabad. Rental per month payable from April is 50 lakh. which is paid to the owner registered in Gujarat by Mumbai head office of the company, as company follows a centralized rental agreement policy for all stores. Invoice for the same is to be issued to the respective registered office in Gujarat. Invoice will be issued to a registered office in Gujarat, but doesn't matter. Whenever it is renting of immobile property, what is the location of supplier in our case? Gujarat. What will be the place of supply? Where the immobile property is located or intended to be located. 12 subsection 3 of IGST Act. Gujarat. What will you end up charging? CGST and SGST. Okay. Company incurred an expense of 50 lakh in transportation of empty cargo containers to centralized warehouse in Mumbai from all states through GTA. So empty cargo containers, just sending empty cargo containers. Is there a need to generate e-way bill? The answer is no. E-way bill will not be required in this case. Rate of GST unless otherwise specified shall be CGST 9%, SGST 9%, IGST 18%. All the divisions of the company are eligible for 100% ITC unless specified otherwise. Okay, what will be the value of supply for Rajasthan? 100 crore. 98 crore plus 2 crore of penalty. How did we get 98? 100 minus 2 crore of discount. Incentive, is there a implication? Should you reverse? No. Should Ghanshyam Das reverse? No. Should company reduce its liability? No. No GST implication. Slotting fee. Tax is payable by the company in Haryana, correct? Because Haryana is the supplier. Tax on penalty received on account of delayed payment of consideration is payable at the time of filing of return for April. Why? When it is received. Upcoming store, what will the owner charge? Commercial property. A nil is wrong. IGST cannot apply. IGST cannot apply. So C plus S. For empty cargo container, we have already answered that no e-way bill will be required. Okay, let's go through question number 12. Mr. Motalal is engaged in wholesale business of dry fruits. He imported 5,150 kgs of almonds from California. Post importation, he did not clear them for home consumption but kept the imported almonds in custom warehouse due to renovation work going on in his retail store. Mr. Bansi Lal, the warehouse keeper, is of the view that the titular rights of almonds vest with him and Mr. Motalal has no access to them. Does warehouse keeper own the title? No. However, Mr. Motalal wishes to inspect the goods. Can he do so? Yes, inspect, show, sort the goods. He can do all this. And ensure that the goods do not deteriorate during storage in the warehouse and thereafter show them for sale to Manohar Lal. Can he show them for sale to Manohar Lal? Yes, permitted. Which of the following statements is correct in the given scenario as per the provisions of Customs Act 1962? The view taken by Bansilal is correct. No, Bansilal is wrong because he is the warehouse keeper. He says nothing you can do. I have every right. The view taken by Bansilal is incorrect. However, Motalal can only inspect. Wrong. He can inspect, he can also show. The view taken by Bansilal is incorrect. However, Mr. Motalal can only inspect the goods and ensure that the goods do not deteriorate during storage in the warehouse. But thereafter, he cannot show them to the for the sale. This is also wrong. The view taken by Mr. Bansilal is incorrect. Further, Mr. Motalal can inspect the goods and ensure that the goods do not deteriorate during storage in the warehouse, and also thereafter he can show them. Yes, this is the correct answer. Clear? Now let's move to question number 13. Now, question number 13, Mr. Dinkar. Now, first of all, it's a lengthier question. So, what will we do? We will first go through what is being asked, freeze on the GST rates, so that we have complete clarity on how to operate this question. Let's see. Compute net GST payable in cash. CSI. 3 given separately, that means you will have to do the computation separately. By Mr. Dinkar for Feb. So our entire focus will be on Feb month. Rate of CGST, SGST, IGST for hiring out excavators and dumpers 6612. As regards to supply received as a merchant exporter, Mr. Dinkar paid concessional rate 0.1% by fulfilling all requisite conditions. Rate of GST, SGST, IGST for all other supplies of goods or services, including supply of manpower services, are 9918. Ignore compensation cess. Mr. Dinkar had an opening balance of ITC, CGST 35,000, SGST 35,000 for the relevant period. We have to use this while doing ITC computation. In respect of all the inward supplies, suppliers have uploaded their invoices in respective form GSTR1 and supplies are reflected in 2B. No problem at all. All the figures given above are exclusive of GST wherever applicable. The amounts given in respect of import and export transactions are in rupees, have been arrived after conversion thereof, though transactions were undertaken in convertible foreign currency. Mr. Dinkar always makes zero rated supply under bond or LUD. Very important informations. Provide supporting explanatory notes for your conclusion wherever required. Okay, now let's approach it one by one. We'll keep mentioning output and input. Mr. Dinkar is the owner of Dinkar Associates, which is registered in Ahmedabad, Gujarat. He is engaged in supply of various goods and services in domestic market and exporting the same outside India. During the month of Feb, he has undertaken the following transactions. Let's see what transactions. Outward supply. Transferred the tenancy rights of a commercial complex taken on rent located in Vadodara for tenancy premium of 8 lakh to DB Morgan Limited of Ahmedabad, Gujarat. Stamp duty and registration fee have already been paid on the tenancy premium. See, tenancy premium transferred for a commercial complex, obviously it is liable to GST. There is a CBIC circular also. GST will be applicable on transfer of tenancy premium plus commercial complex, plus it does not matter whether you have paid registration fee or stamp duty. Now the complex is in Gujarat, plus you have given to a person who is in Gujarat, property is also in Gujarat. What will you end up charging? You will end up charging CGST plus SGST. How will you do the computation? The computation will be 8 lakh into 18%, 8 lakh into 18%, which comes to 72,000 CGST and 72,000 SGST. So this will be part of my output tax. Then let's see the second one. Hired out excavators and dumpers along with operators. So you are hiring out excavators and dumpers, and along with that operators are also being hired out to a mining leaseholder in Gujarat. So you are also in Gujarat, letting out in Gujarat for extracting and transporting minerals within the mining area for a period of 5 years. The excavator and dumpers are invariably hired along with the operator. Principal supply is excavators given on hire. Similarly, operators are supplied only when the excavators are hired out. Hire charges for excavators is 10 lakh and service charges for supply of manpower of operators 2 lakh. 12 lakh this is a composite supply. Principal supply being giving the excavators on hire, 12% GST will apply. It is given in Gujarat. Where are you from? You are also from Gujarat. So what will you end up charging? CGST, SGST. So 12 into 12%, 72,000 CGST, 72,000 SGST. Okay, then supplied goods of value 35 lakh to Choksi Limited, Jamnagar, Gujarat, again Gujarat, includes goods worth 10 lakh supplied to SEZ unit. So 25 lakh will be liable at 18%, and 10 lakh SEZ supply is a zero rated supply, so there will not be any tax implication. So 25 lakh into 9%, 2,25,000 CGST, 2,25,000 SGST. So we arrive at these numbers as well. Then let's see the next one. Agreed to provide consultancy services to Mr. Krishna of Surat, again Gujarat, who is an unregistered person in connection with his newly commenced business for 6,80,000. An advance of 1,50,000 has been received on 10th Feb. Will it come in Feb calculation? Yes. So 1,50,000 into 18%. You are doing consultancy. This is also Gujarat. So this 1.5 lakh into 9%, 13,500. 13,500. Exported goods to George Inc. of USA. FOB value of the goods 8,40,000. Export you are doing under bond or LUT, nothing. Sold a heavy printing machine purchased from Japan for 5,10,000 in high C to Dhumketu Printers, Mumbai, Maharashtra. High C sale. Whether output tax will apply? No. Why? Because it is covered by negative list, so there will not be any implication. Then supplied goods to Timahi Corporation, China for 12 lakh on 15th Feb. These goods were purchased for 10 lakh from a Japan company on 5th Feb, and it was supplied without bringing them to India. You remember, from one non-taxable territory to another non-taxable territory, it is covered by negative list. There will be no GST implication. So I have closed my output. Let me total this up. Now if I total this up, +70 +72 225 13 382 500 CGST, 382 500 SGST, IGST dash. Now have a look at it again and see whether there is E, because if there is E, then you'll have to do E by F, common credit reversal. You remember this? Because even if one entry is exempt or there was some supply which is covered by RCM, then in that case you'll have to do exempt by total turnover and do a common credit reversal of common inputs. This is not E. This is not E. You are charging GST. This is not E. ZRS is not E. This is again not E. Export ZRS not E. Negative list entries are also not considered as E. Only duty credit script sold, that is also excluded. Duty free shop, that is included in E. That transaction is not there, so no need to do E by F. Now you be careful, institute may check something on duty free shop in the examination. Because if a duty free shop question is given where something is purchased in the duty free shop and then sold, then in that case, for that you will not get ITC because that becomes E. If it becomes E, you will have to do a E by F computation. In this question, there is no need to do E by F because there is no transaction which requires any E by F computation. Clear with this? Yes. Okay. Now let's see inward supplies. Inward supply, I'll start with opening balance. Opening balance of ITC. ICS. How much was the opening balance? 35,000, 35,000. I dash 35,000 CGST, 35,000 SGST. Okay, then goods exported to George Inc. US were purchased by Mr. Dinkar as a merchant exporter. Purchased as a merchant exporter. So I am a merchant exporter. I have purchased it as a merchant exporter for 7 lakh from Shravan Limited, a manufacturer registered in Karnataka. I am in Gujarat. He is in Karnataka. 0.1%. And will I get ITC? The answer is yes. For merchant exporter, he gets ITC. The only thing is he cannot claim refund of this 700. Is he eligible for ITC? Yes. It does not come in net ITC computation, but he is still eligible for ITC on this. Heavy printing machine sold in High C to Dhumketu printers were originally imported by Mr. Dinkar from Japan on 2nd Feb with a CIF value of 5 lakh and FOB value of 450. Nothing has to be done. There is no GST at all, no custom duty payable by me. Why? See, only when I would have filed bill of entry for home consumption, only then I would have paid GST from my pocket. As I have not filed bill of entry for home consumption, there is no question of me paying any IGST. There is no question of getting ITC. So there is no ITC for this transaction because I have not paid any GST. Mr. Dinkar paid sales commission of 5 lakh to Mr. Kenzo of Japan, his agent, in connection with all the imports from Japan. So you have paid a sales commission of 5 lakh to Mr. Kenzo of Japan. What is the place of supply? Agent is outside India. Place of supply will be Japan. Second, there's no import of service. That means, because import of service would have triggered only when there was a consumption in India. There is no consumption in India because place of supply is outside India. So as place of supply is outside India, no GST as import of service. Now see the second point. If the supplier and recipient both are outside India, any intermediary service enjoys a exemption. So as there is no GST applicable on this transaction, there is no question of input tax credit. Neither I have to pay on reverse charge, plus there is an exemption entry available, no question of GST. Then imported raw material from Italy under a CIF contract. CIF value of the goods for the purpose of customs included 2 lakh as ocean freight paid by exporter on transport of goods through vessel from port of shipment to port of import. Freight is paid by exporter. The shipping company is outside India. Mohit Mineral Supreme Court judgment. There is no GST implication on this because I am not the recipient at all. So there cannot be any implication on me. Supplier is there. Shipping company is outside India. The person who has paid the freight is my exporter who is also outside India. Both are outside India. I don't have to worry. There is no implication on me. The value for the purpose of levy of IGST worked out to be 9 lakh. On this I would pay IGST because value for IGST is 9 lakh. Now on this 9 lakh I would have paid 18%. 9 lakh into 18% would come to 1,62,000. Will I get ITC of this? Yes, because this is paid on import. Okay, then purchased raw material for manufacture of garments, 12 lakh from Mr. Punawala, an agriculturist of Gujarat. RCM and ITC. I'll have to pay this under RCM. Raw cotton goods related RCM has been added in your syllabus. So raw cotton you have to pay tax under RCM, plus you can avail ITC. Now raw cotton again 18%. Let me do the computation. 12 lakh into 9%, 1,08,000 CGST, 1,08,000 SGST. Now this will also come in RCM payable at the end. We write RCM payable at the end. ICS 1,08,000, 1,08,000. Okay, then monthly rent of 35 lakh payable to Dharam Limited, Gujarat, for retail outlet, commercial property in Ahmedabad, Gujarat. 1/3 of the space available is used by Dinkar for personal residential purpose. So 1/3 you will not get personal purpose. Whatever you are using, you will not get ITC. So you will get ITC for 2/3 into 18%. So 35 lakh into 12%, and this will be CGST and SGST. 35 lakh into 6, 2,10,000. 2,10,000 CGST, 2,10,000 SGST. This much of ITC you will get. 1/3 will be disallowed because non-business purpose. Now if I total this up, 162,700, this will be 210,318, 3,53,000 and 3,53,000. Now output minus ITC. See, I've got my output above. Let's bring it here. output tax 3,82,500, CGST 3,82,500, SGST. Now ITC I have to use IGST first, and IGST is 162,700. I can use half because the input tax credit is equal, so 162,700 by 2, 81,350 and 81,350. So 382,500, 3,01,150, 3,01,150. Then I have 353. I can use this 353 to the extent of 3,01,150, 3,01,150. Balance will be carried forward, but GST payable on output is 0. RCM I will have to pay, correct? Yeah, RCM I will have to pay. Plus, in institute answer, institute has mentioned that this has to be paid through ICE Gate portal. This 1,62,000 of IGST has to be paid through ICE Gate portal. See, they are just calculating what is the GST payable. They are not saying that this is payable under RCM. No, don't miss the language given in the answer. RCM payable can only come in GST law. This 1,62,000 which is part of customs, you pay basic custom duty, social welfare surcharge, IGST. That IGST they are saying pay it through ICE Gate portal, comes under GST payable by me, but it does not mean it becomes RCM. RCM is only this. So total GST payable will be 162 which will be paid through ICE Gate portal, 1,08,000 which will be paid through GST portal. That's what is mentioned in the answer. Clear? Okay, now let me show you the wordings of this question number 13. So tenancy rights, GST charged. Hiring of excavators, GST charge. Go through the notes. Composite supply. Supply to SEZ, zero rated supply. Balance will be intrastate. Consultancy service, on the advance amount GST will apply. Export, no GST. High sea sale covered by negative list. From outside India to outside India, again covered by negative list. You get 380 to 500, 380 to 500. You use IGST, and then after you use IGST you use C plus S. Then GST payable on inward supply. They are not saying this is RCM. Imported raw material from Italy, you'll pay this. Raw material purchased from Gujarat, this is RCM. See, this you'll find the wordings reverse charge, but first one is not reverse charge. Now see, net GST payable in cash. This will be paid on GST portal. 162 will be paid on ICE Gate portal while making custom clearance. So even if we don't write this, you can write it as a note, that's sufficient. Okay, then merchant exporter 0.1% you'll get ITC. Then heavy machines imported, again nothing. Commission paid, the place of supply will be outside India, plus it is not liable because place of supply is outside India. Imported raw material, you'll get ITC. Raw material RCM, you'll get ITC. Monthly rent, you'll get ITC to the extent of 2/3. And here is where you come to the final conclusion. Yes, Okay. Now let's go through question number 14. Mr. Jignesh of Delhi book accommodation through an e-commerce operator. Plan My Trip Limited. Jignesh, Delhi, booking accommodation through e-commerce operator Plan My Trip Limited. Registered under GST in Uttarakhand. So Plan My Trip is in Uttarakhand and they are registered. In a newly established budget hotel, Paras Resort Limited, located in Nainital, Uttarakhand. The turnover of Paras Resort Limited in current financial year is 18 lakh. So is Paras Resort Limited liable to register under 22(1)? Not liable to register. Paras Resort Limited raises an invoice for 1 lakh to Mr. Jignesh. PMTL, Plan My Trip Limited, collects the payment from Jignesh and after deducting its fees and other charges for the same, remits the balance amount to Paras Resort Limited. Advise Paras Resort Limited as to whether it is required to obtain registration. No. Also, whether tax is required to be collected at source by PMTL under section 52 on services provided by PRL to Mr. Jignesh through Eco PMTL. If yes, determine the tax collected at source. So, an unregistered person supplying accommodation service through e-commerce operator. CBIC has given a clarification that whenever unregistered person is supplying, TCS will not be applicable. This is argument 1 which you will write in the exam answer. Second, in this case, it is covered by 9 subsection 5. That means ECO is required to pay the main tax. When ECO is required to pay the main tax, it is again not covered by section 52. Thereby, there is no question of TCS on this particular transaction. Simple reason, 2 reasons. 1, unregistered person supplying through ECO, there is anyways no TCS. Second, if it's a case of 9(5), then it does not fall in net taxable value definition, because net taxable value means value of services supplied through e-commerce operator other than services covered by 9(5). Because 9(5), who will pay the main tax? ECO. Now ECO is liable to pay the main tax. Will ECO also collect TCS? The answer is no, and hence there is no need to do any TCS compliance. Okay. Suppose in the above case, other facts remaining same, if PRL supplying accommodation service is also an e-commerce operator. PRL, Paras Resort Limited, registered in Uttarakhand as a tax collector as well as a regular taxpayer, since its aggregate turnover exceeds threshold limit. Now PRL is registered as a taxpayer, regular taxpayer, and also as a TCS collector. And PMTL has an agreement with PRL for booking accommodation at the time when Mr. Jignesh booked the accommodation. Ascertain whether tax is required to be collected at source under section 52 on the services provided by PRL to Mr. Jignesh through e-commerce operator PMTL. If yes, determine the amount of tax to be collected at source, since 2 e-commerce operators are involved in the said transaction. Who is required to collect tax under section 52? Rate of GST is given. Now, if there were two e-commerce operators, PRL is eco 1, PMTL is eco 2, and there is the customer. Who is providing the service? PRL is providing the service. So PRL is not going to do TCS. Who will do TCS? TCS will be done by PMTL, that is buyer side e-commerce operator, because seller and eco are same persons. Otherwise seller side e-commerce operator does it. But here seller and eco is same. PRL is supplying and PR is also eco. Then PMTL will do TCS. How much will be the TCS? 1 lakh rupees is the booking amount, 0.5% CGST and 0.5% SGST. That's it. Clear with this? Yes. Let's have a look at the answer. Okay. As per section 22, every supplier of goods or services or both is required to obtain registration in the state or union territory from where he makes the taxable supply if his aggregate turnover exceeds threshold limit in a financial year. However, section 24 inter alia amongst other things provides that the persons who is supplying goods or services through an e-commerce operator who is required to collect tax at source under section 52 are required to obtain registration mandatorily. However, the said mandatory registration is not applicable inter alia to suppliers of services who are notified under 9(5) or 5(5) of IGST. Such suppliers are entitled to threshold exemption. In case where services are notified under 5(5) of IGST Act, eco is liable to pay the entire tax on behalf of the suppliers of services. Notification 14/2017 issued under the section notifies services by way of providing accommodation in a hotel provided by a person supplying such service through eco is not liable to register under section 22 as one such service where the eco is liable to pay tax on behalf of the suppliers. In the given case, PRL provides services by way of providing accommodation in hotel through an eco. Service by way of providing accommodation in a hotel provided by a supplier PRL which is not liable for registration under 22(1) as its turnover is less than the threshold limit for registration, that is 20 lakh, is a service notified under 5(5). Thus, PRL will be entitled for threshold exemption for registration and will not be required to obtain registration even though he supplies through eco. As per section 52, eco is not required to collect TCS in cases where service is notified under 9(5) or 5(5). The applicable taxes on such service is to be paid by eco as if he is the supplier liable to pay tax on such services. Thus, in the given case, no tax is required to be collected at source under section 52. Further, the supply of accommodation service by PRL to Mr. Jignesh is a intrastate supply liable to CGST and SGST, since the place of supply of services by way of lodging of accommodation by hotel is location at which immovable property is located in terms of 12.3. Accordingly, in the given case, place of supply is Uttarakhand, location of supplier is PRL is also Uttarakhand. As discussed above, entire tax of 9,000 each under C and S on 1 lakh will be paid by ECO. ECO will have to decide pay everything. In case where PRL is registered under GST, services by way of providing accommodation in a hotel provided by it through ECO will no longer be notified under 5.5. The reason for the same is that service by way of providing accommodation in hotels are notified under section 5.5 only where the person supplying such services through ECO is not liable for registration under 22. Consequently, the said services shall be subject to TCS under 52. The moment it is not a case of 9555, it will be a case of TCS because the supplier is registered. Further, in situation where multiple ECOs are involved in a single transaction of supply of goods or services or both through ECO, and the supplier side ECO is himself the supplier of the said supply, then the circular issued by CBIC clarifies that buyer side ECO will be required to collect TCS as applicable, pay the same to government in accordance with 52, and also make other compliances under the said section. As discussed above, supply of accommodation by PRL is an intrastate supply liable to C and S. Accordingly, in the given case, buyer side ECO, that is PMTL, is required to collect TCS on 1 lakh of 0.5% C and S, which will be 500 each. Clear with this? Yes? Okay. Let's now see question number 15. Okay. A notice for audit under section 65 is served by proper officer on the basis of risk assessment to Ghum Private Limited on 2/12. So on 2/12 they served a notice that we are going to do a GST audit under 65. For the audit of 21-22 and 22-23, the tax authorities visited the place of business on 2012 initiation, that's the initiation of audit proceedings, and requested for certain records, documents and books of accounts from the company. The required records, documents and books of accounts are provided by Ghum Private Limited on 30/12. So 30/12 we have received the documents department. After in-depth checking of the records, documents, books made available by Ghum Private Limited during audit, the audit was completed on 25/3/2024 and audit findings were communicated to taxpayer in prescribed form by said date. So 25/3, have they completed the audit in time? The answer is yes. 3 months is the time, plus one extension of 6 months can be taken by a higher level officer. So 3 months, have they completed the audit in time? Yeah, because the time at which they have to start is date of institution or date when records are available, whichever is later. So later date is 30th December, 3 months. Obviously we are within that 3 months. However, the accountant of Ghum Private Limited is of the view that The tax authorities have completed the audit of Gum Gum Private Limited after lapse of maximum time period. The tax authorities cannot conduct audit of 2 financial years. Why? There is no such restriction that they can't do for 2 years. Does the law mention any such restriction? No. Accountant feels. Gum Gum Private Limited has approached you to advise on the said issue. You are required to determine the technical veracity of the above views of the accountant of Gum Gum Private Limited on the same with reference to relevant provisions of GST law. So, is it done in time? Yes. Can 2 years be done together? Yes. That's the answer. Sir, only this? No, 5 mark. You'll have to write all the provision. Let's see. Okay, let's go through the answer. Okay. As per section 65, audit of a registered person may be undertaken by commissioner or an officer authorized by him by way of general or specific order. Audit shall be completed within a period of 3 months from the date of commencement of the audit. However, where the commissioner is satisfied that audit in respect of such registered person cannot be completed within 3 months, he may, for reasons to be recorded in writing, extend the period by further period not exceeding 6 months. For the purpose of this subsection, commencement of audit shall mean date on which records or other documents called for by tax authorities are made available by registered person, or actual institution of audit at the place of business, whichever is later. In the given case, commencement of audit shall be determined as follows. The date on which requisite information is made available, 30th December. Date of institution of audit at the place of business, 20th December, whichever is later. So 30th December. You add 3 months, you land to 30th March. In the given case, audit was completed by tax authorities within 3 months from date of commencement of audit, that is before 30th March 24. Resultantly, the view of the accountant of Gum Gum Private Limited that the audit by tax authorities was completed after maximum time period is not correct. Further, as per section 65 read with rule 101, the period of audit to conduct in the said section shall be financial year or part thereof or multiples thereof. Thus, the view taken by the accountant that audit of 2 financial years is not correct. Okay. Now let's see question number 16. Agora Limited exported certain goods to its customers located in Germany, against which refund of IGST of 50 lakh was claimed and received by Agora. So Agora has received 50 lakh of refund. The sale proceeds covering 50% of the value of exports were immediately received by Agora. So you have received 50%. However, due to financial constraint, customer failed to pay the balance amount of sale proceedings within the permissible time limits under regulatory provisions prevailing in India. In view of the aforesaid scenario, determine the amount of refund, if any, which Agora Limited is required to deposit back. 50% received, 50% not received. So 25 lakh will have to be. Also discuss the time limit, which is within which sale proceeds for exported goods should be realized. Time given in FEMA, that is 9 months. Will your answer for subpart A differ if RBI writes off the requirement of realization of sale proceeds on merits? If RBI writes off saying that no need to receive it, then in that case, no need to pay 25 lakh back. Whether Agora Limited can claim refund back in case sale proceeds are realized at a later point of time. Yeah, but it should be within the permissible time limit which RBI has allowed to get the foreign currency. Then in that case, you can again claim back the refund which has been paid due to non-realization of sale proceeds. Most important thing in these cases is the language which you use in the examination. Let's have a look at the answer. Okay, question 16. As per the proviso to section 16.3 read with rule 96B, in the given case, Agora Limited shall deposit the amount of refund proportionate to the sale proceeds not realized, that is 50% of the export. The amount of such refund is 25 lakh along with interest under section 50. Further, the amount is required to be deposited within 30 days from the expiry of time period allowed under FEMA, including extensions. As per proviso to rule 96B, the sale proceeds or any part thereof in respect of such export goods are not realized by applicant within time period allowed by FEMA, but RBI writes off the requirement of realization on merits, then the refund paid to applicant shall not be recovered. Thus, if RBI writes off the requirement, then refund amount is not liable to be recovered. See, Rule 96B says where sale proceeds are realized by applicant in full or in part after the refund has been recovered from him under Rule 96B and the applicant produces evidence about realization within 3 months from the realization of export proceeds, the amount so recovered shall be refunded by PO to the applicant to the extent of realization of sale proceeds, provided the sale proceeds are realized within extended period as permitted by RBI. In case refund amount is deposited by Agora Limited along with interest as per Rule 96B on account of non-realization of sale proceeds from customer, which is realized on a later date, Agora can claim refund within 3 months from realization in proportion of the sale proceeds recovered. However, in order to claim refund, sale proceeds should be realized within extended period as may be permitted by RBI. Okay. Last 4, let's see 17th one. Okay. Discuss the cases where a registered person is not allowed to furnish the details of outward supply under 37 in GSTR1 or IFF as enumerated in Rule 59. Where are you not allowed to furnish outward supply? That is GSTR1. First one, if you don't file previous GSTR1, then you are not allowed to file current GSTR1 or IFF. If you have not filed previous tax period 3B, then again you are not allowed to file GSTR1. If you have violated rule 88C, that is mismatch between GSTR1 and 3B, notice received and did not reply, then again will not be allowed to file subsequent GSTR1. Or violation of rule 88D, that is mismatch between 2B and 3B, received a notice but did not reply, again not be allowed to file GSTR1. And last one is if bank details have not been submitted within the time period allowed under rule 10A, again GSTR1 will not be allowed to be furnished. What is the time period? Due date for filing GSTR1 or 30 days from grant of registration, whichever is earlier. Let's see the answer for 17. Rule 59.6 provides that a registered person shall not be allowed to furnish details of outward supply in GSTR1 if he has not furnished the return in 3B of preceding month. A registered person opting for QRMP shall not be allowed to furnish details of outward supply in 1 if he has not furnished return for GSTR3 before preceding tax period. A registered person to whom an intimation has been issued on the common portal under rule 88C in respect of tax period shall not be allowed to furnish details of outward supply for subsequent tax period unless he either deposits the amount in the intimation or furnishes the reply for the unpaid amount. A registered person to whom intimation has been issued on the common portal in rule 88D in respect of tax periods shall not be allowed to furnish form GSTR1 for subsequent period unless he has either paid the amount of excess ITC or has furnished the reply explaining the reasons that why such ITC still remains to be paid as required under 88D. Last one, shall not be allowed to furnish one or IFF if he has not furnished details of bank account as per rule 10A. Okay, now let's see the 18th one. Now 18th one, if you have the hard copy of RTP, then the question will be, 1 point will be different in that. I have the latest one, which is the amended one by ICI on ICI website. Paramjeet Limited, an importer of machine from Olive Equipments. The FOB price of the machine was settled at 6,000 UK pound. Machine was shipped on 110/23. Meanwhile, Paramjeet renegotiated the price of the machine with Oliver Equipment, which agrees on reduced price of 5,000 UK pounds on 10/10/2023. The machine arrived in India on 18/10. So what was the price at the time of importation? Garden Silk Mills judgment. The price at the time of importation will be used. Price at the time of importation is 5,000 UK pounds. So what you'll use is 5,000 UK pounds as the FOB. License fee that the buyer was required to pay in UK as a condition of sale, this will get added. So 5,000 is the FOB. Now this license fee gets added, 500. Buying commission is not liable. Cost of transportation from UK port to Indian port is 40,000. Apart from this, due to deep draught at the port, machine was not taken to the jetty in the port but was unloaded at the outer anchorage. Additional charges incurred for such unloading and transportation from outer anchorage to jetty in barges, that is small boats, was 10,000. So freight and basically barge charges is 50,000. and it's 50,000 INR. See, this is rupee symbol actually. No. Because this point has been added separately by institute. Earlier only barge was given as 50,000. Then actual transportation cost was not available. So there was a confusion in the answer. Then said port 40,000 plus barge, ship demurrage, barge lighterage 10,000. So total 50,000. Now 5,500 is the actual FOB. You'll add freight, you'll add insurance. Insurance is given. No, insurance is not ascertainable. Now let's see which rate of duty and which rate of exchange. Rate of exchange is first bill of entry, and rate of duty is whichever is later. So 15%. You'll use 15% and 100 rupees. Yes, don't make a mistake in this. Rate of exchange is first bill of entry. Rate of duty is whichever is later between entry inwards and bill of entry. So this will be 100. So this was UK pounds, UK pounds, UK pounds. Now 5,500 into 100, 5,50,000 is the FOB in INR. Then freight and barge 50,000 actual available, use actuals. Insurance will be 1.125%. Now 5,50,000 into 1.125%. 6,188. So 6 lakh plus 6,188 will be 6,06,188. This will be CIF assessable value in INR. Then basic custom duty they have told you to calculate in rupees. So into 15%. Which comes to 90,928. That's it, right? Basic custom duty they have asked. They have only asked basic custom duty and assessable value. If they would have asked total custom duty, we would have also done social welfare surcharge. Even if not given, we will write an assumption. But they have asked only basic custom duty, so we'll stick to that. Let's see what institute has done. Okay, 5,50,000. Then 50,000 cost of transportation. 6,187. You get the assessable value. Basic custom duty has been asked. Only basic custom duty computation done. Yes. Okay, let's see the 19th question now. Only 2 to go. Okay. Ayat Enterprises imported goods vide a bill of entry presented before PO on 15th April. The proper officer decided that the goods should be subject to chemical test, provisional assessment, and therefore the same was to be provisionally assessed. You are required to advise Ayat Enterprises regarding the conditions which are to be complied with before payment of duty is made for the purpose of provisional assessment. Subsequently, the goods imported by Ayat Enterprises were provisionally assessed at a value of 24 lakh on 16th April. Ayat paid the provisional duty of 2,40,000. We'll take one. On the same date, after fulfilling the requirements of provisional assessment, this should also be 2,40,000. Or this should be 24, but I am going by this 280. Anyways, further, the chemical test report was received on 5th May. Advise Ayat Enterprises regarding maximum time limit up to which provisional assessment should be finalized. 2 months plus 3 months. Determine the amount of interest, if any, payable under 18, considering 365 days, assuming that provisional assessment was finalized on 30th June. finally assessing the custom duty at 280 and differential duty was paid on same day 40,000. Interest will apply on 40,000 till 30th June. So 1st April 30 days, May 31 days, June 30 days, 91 days. So 91 days divided by 365 into 15%. This will be the interest. Correct. So let's do a computation quickly. One 496, and time limits have to be mentioned, conditions that you might be required to give a bond. Let's see. Okay, as per section 18 of Customs Act 1962 along with circular number 38, wherever duty is to be assessed provisionally, the importer shall execute a bond in prescribed form for the purposes of undertaking to pay on demand the deficiency between duty finally assessed and provisionally assessed, furnished a security for payment of duty deficiency. The security to be obtained shall be in the form of bank guarantee or cash deposit as may be convenient to importer. As per the custom finalization of provisional assessment regulations 2018, proper officer has to finalize the provisional assessment within 2 months from the receipt of chemical or other test report where the provisional assessment was ordered for that reason. The proper officer can finalize the provisional assessment within 2 months from receipt of chemical or other test where the provisional assessment is ordered for that reason. The Commissioner of Customs may allow a further period of 3 months in case proper officer is not able to finalize within 2 months. So in the given case, provisional assessment will be finalized by 5th July because test report is received on 5th May. From there, you'll get 2 months time. However, if the proper officer is not able to finalize by 5th July, Commissioner may allow further 3 months, 2 months plus 3 months, that is 5th October. Had the provisional assessment been finalized by 30th June, differential duty has been paid on same day, then importer would be liable to pay interest on the amount payable consequent to final assessment at 15% annum from the first day of the month in which duty is provisionally assessed till date of payment. 15%, 91 by 365. Clear? Okay, let's go to the last question of this RTP. Okay, with reference to FTP 2023, explain in brief the objective and salient features of remission of duty and taxes on export product. FTP related question. Objectives, salient features. Basically, the objective is to refund the unrefunded taxes like central excise, VAT. There might be some central excise VAT on petrol, diesel, transportation expenses. So that is not refunded because you get a GST refund, you get a customs refund, but you don't get refund of unrefunded duties and taxes or cesses. So the purpose is to give the refund of those because technically any goods which is exported, the goods should be exported, not the taxes. Salient features, basically you can talk about it's in the form of e-credit script. The credit script has to be utilized in the credit ledger for payment of basic custom duty. it is freely transferable. There is no issue. It will be based on a percentage of FOB or the amount determined in the RODTEP scheme. Let's go through the answer. Remission of duties and taxes on export product is a scheme based on globally accepted principle that taxes and duties should not be exported, and taxes and levies borne on the exported product should either be exempted or remitted to the exporter. RODTEP scheme aims to refund such duties and taxes on export products as are otherwise not being refunded under other provisions of law. The rebate under this scheme shall not be available in respect of duties and taxes already exempted, remitted, or credited. Objective of the scheme is to refund currently unrefunded duties, taxes levied at central and state and local level borne on exported product, including prior stage accumulation of cumulative input direct taxes on goods and services used for production of export product, and such indirect taxes, duties, or levies in respect of distribution of export products. Salient features: it is in the form of e-scripts, which is maintained in the electronic ledger. It can be used only to pay BCD. It is freely transferable. It can be transferred. Rebate shall not be available in respect of something which is already exempted, remitted, or credited. So something which is already being dealt with, that will not be eligible for a refund. Clear? So this was about November 2024 RTP. Wish you all the best for your CA final exams of November 2024. Take care.